We'll get to Ted Oakley, founder of Oxbow Advisors, to give us a look into this market. I mean, right now we're going to be taking a look at the payment space. I know you have some thoughts on that group, but I just wanted to get your feel on the fact that we're going to be seeing GDP that's probably down maybe 30%. Our economy, which was doing so great, basically came to a halt. But there's going to be some pent-up demand. We just had a conversation about that, and things will come back. But the question is when. What are your thoughts, Ted?
Well, Nicole, I think they're really underestimating the damage that'll be done to earnings this year. And so I'm not expecting that quickly. If you look at things, when you slow down everything, consumption, demand, and supply, you don't just crank up overnight. And I think that's where most people are probably missing this one. And the earnings numbers are, you look at consensus, they're way over where they should be.
Okay, so we're going to have to lower them more. I see what you're saying. Obviously, you have some thoughts on the payment space, names that include Visa and Mastercard. Why are you looking at those names in particular?
Well, if you just look at them, you're not having the credit risk. You're just having a throughput. In other words, if you have social distancing, people doing more things online, they're paying with credit cards, et cetera, I think that's where you're going to see something that'll still hold up even in bad times. That's what we look for. And we've owned these for quite some time. So we still think there'll be two companies that will do well in this whole group.
Yeah, I understand that. I mean, it makes sense, right? Regardless whether you're home or you got to use those payment things. Also, REITs, I think, are very interesting. You're actually bullish on a couple of REITs, Ted, and REITs, many of which are going to have a hard time because I'm not sure how many people will be able to pay their rent and such. But you have a couple of REITs that are interesting to you that you're bullish on.
Well, we do, Nicole. I mean, we just bought these, actually, in the last week or so. And it's Physician Realty and Medical Properties. Now, I might say we have always liked REITs, but they've really been too expensive for us the last couple of years. But these are two that we think will hold up in any time. We think with the essential services that they have. There are a lot of good REITs out there. The problem is on the other side. If you look at a lot of the areas that are in the REIT section, we really don't think they're going to hold up well. And I think we're just now finding out exactly what's going to happen in the real estate markets. They're tougher probably than people think they are right now. And REITs are usually a favorite, aren't they? I mean, they pay good dividends like utilities. They're usually more of a safety play, but you're not saying to buy the entire REIT group at all. No, because if you look at retail, you look at certain areas that's in the REIT section, they're not going to bounce back. In fact, I would suspect that a number of those will probably have to cut their dividends. I don't think the medical REITs will, but I do think you'll get in a situation where you'll have a number of the REITs that are probably overestimating what they can pay this year. I mean, I know some of them are in really good shape, but you have to understand the shutdown that we've had in that business. And if you go across the country, which we do, talking to people in commercial and retail, malls, et cetera, it's a tough run out there right now.
Yeah. You know what, Ted, I wanted to just ask you, in the beginning of the conversation, you said you don't think things will bounce back so quickly, especially after the economy has basically come to a screeching halt. Give us your outlook. What is your final thought? When do things get better for USA, for shareholders? What's your final thought?
Well, my final thought is that the low you had back on 8 days ago or whatever was not the low. It was a low. And I think what's happening is if you look at the numbers this year, they're using the S&P at 155 or 160 consensus. They'll never hit that. And I think that's not in the market yet. And so I think people have to be like we are, which is they have to have a fairly decent cash buffer because I think that the tougher markets probably lie ahead, and I don't think they're ready for them.
Tougher markets and have some cash. Got it, Ted. Thank you so much for your insight. Ted Oakley, founder of Oxbow Advisors. Thanks, Ted.